And we're live. Welcome back to the Better Than Bitcoin podcast, where I talk about the future of money. I'm your host, Jamie DeBascus. So, a lot has happened to Bitcoin over the past week, so let's talk about it. For a little market recap, I'm slightly bullish on Bitcoin in the next few weeks. I'd be more confident in what I think in these past few weeks, but volatility has been skyrocketing through the roof, so it's starting to get a little unpredictable for me. But if volatility is in the right direction, it's starting to get profitable for me and anybody in Bitcoin. Anyways, since last week's episode, Bitcoin rose to a key point of $9,200, then fell dramatically to $8,400 to $8,700-ish range. Bitcoin punctured the 200-day moving average at 9,040 a coin, but didn't close a candle above that level. If Bitcoin can puncture and record a closing candle above the 200-day moving average, then I personally think we can start another run up. Last time Bitcoin punctured through that 200-day moving average was when I was around 240-ish a coin back in late 2015. That was at the very start of a parabolic run from the bottom of $150 a coin all the way to $20,000 a coin. That's over the span of like 2015 to 2017, so like 2 years, 1 year and 3 quarters. I don't know. I think it was late 2017 about 2 years. Anyways, so I personally feel like the show is just getting started for Bitcoin, and it's early 2020. It's only January, and things are looking great. Halving is in May. The reward halving for Bitcoin is in May, and 2020 is gonna be a great year for Bitcoin. Yeah. So that's pretty much my market update for this episode. It's not really too detailed because it's getting crazy. It's getting mania. Can't really predict anything. I don't want to say anything publicly and get, Jamie was wrong. Anyways, that's all for the market update. I now want to talk about a few news articles from this weekend that seemed cool to me. The first article is about a new bullish catalyst besides the reward halving for Bitcoin. So a proposed Softfork upgrade is supposedly coming for Bitcoin. For those of you who don't know, a Softfork upgrade is an upgrade to a blockchain that is backwards compatible with the old network. This makes it so that people that don't have to move funds when a new currency like Bitcoin and Bitcoin Cash is created. So there's a soft fork upgrade and there's a hard fork upgrade. The hard fork upgrade, an example of that is like when Bitcoin Cash forked off from Bitcoin and became two separate assets, and you had to choose, I want my Bitcoin to be in Bitcoin, or I want to transfer my Bitcoin to the Bitcoin Cash blockchain or something like that. Claim your coins or something. Or something weird. But like a soft fork. Anyways, the bottom line is the soft fork upgrade is not a separate asset. It's just an upgrade to the network. Anyways, this upgrade is supposed to add novel smart contracts to the base layer of the Bitcoin network. This is a big upgrade considering that another blockchain called Ethereum, some of you may have heard of it, probably now, but Ethereum was created back in 2015 in response to Bitcoin not having smart contract functionality or not having any sort of smart contracts at all. Now Bitcoin's getting that. Well, late 2020 it is. It's scheduled to go into effect in the last 3 months of this year, according to Forbes. Now, this Bitcoin smart contract upgrade won't be as innovative as the whole Ethereum smart contract ecosystem. Like with Ethereum, it's not going to be to the level of Ethereum, what they have going on over there, but it is a step in the right direction, I think. Maybe it's a step in the direction of consolidating blockchains by eventually having Bitcoin have all the features as other blockchain projects. I know Brian Armstrong wrote about seeing a consolidation of blockchain technology in his article. But what I see for crypto in the 2020s. This is the article I talked about a couple episodes ago on this podcast. I think it was like my New Year's episode or a couple days after that. Yeah. Anyways, moving on to the next article. One big story from this weekend is pretty funny. It actually happened yesterday when I was supposed to record. And I'm glad I didn't, because if I missed this story, this would be funny. Anyways, one big story from this weekend is notable gold trader and economist Peter Schiff, who is notorious for being anti-Bitcoin. He has supposedly lost the password to his Bitcoin wallet. I mean, once you dig deep and boil the story down, it's pretty simple. He forgot his password to his wallet, and when you forget your password to a Bitcoin wallet, you usually have a recovery phrase or you have a private key. Some wallets, like what I use, the Exodus wallet, you can see your private key, but like it's not really required, and you can just rely on the 12-word recovery phrase. So if you have the private key and the recovery phrase, you're all set. You have it written down somewhere in your lockbox or something like that. You're all set. So if you forget your password, you can restore your funds, stuff like that. But the thing is, Peter, he did not write it down, and he did not write down his recovery phrase or his private key. So he pretty much just lost his funds forever. He can't get his password back because he apparently forgot it. But the thing that blew his story out of proportion was the way he was describing it on Twitter and the way he was acting on Twitter. He described it as basically not his fault and as Bitcoin's fault. And that's what people not really rioted, but like just started picking on him on Twitter. But the wording of his tweet, when you read it, I'm going to read it to you right now. The wording of his tweet is just awful. This is what he said. I just lost all the Bitcoin I've ever owned. My wallet got corrupted somehow, and my password is no longer valid. So now not only is my Bitcoin intrinsically worthless, it has no market value either. I knew owning Bitcoin was a bad idea, I just never realized it was this bad. He then proceeded to claim, like on comments, and people commenting on that Twitter thread, he then proceeded to claim that he didn't forget his password, the wallet forgot his password. And that's when everybody blew up going, what the heck is this guy thinking? I will admit, he is an older man. He probably is behind a little bit on technology. So that is probably what the case is here. I mean, this whole fiasco, personally, is a bigger reminder for everyone that managing your own wealth is a responsibility. Most aren't used to it because banks have done it for everyone since the beginning of time. In terms of Bitcoin, that responsibility is writing down your private key or writing down your recovery phrase and keeping those passwords and keys in a lockbox somewhere in your house, locked up, fireproof, so it doesn't get burnt or something like that. Or some people, if they don't trust it being in their own house, it's counterintuitive to say this, but some people put their private keys in a safety deposit box in the bank. It's a safe way to keep it, yes, but it's logically doesn't make sense because the whole point of Bitcoin is to be your own bank, but you're letting the bank keep the keys to your Bitcoin. Anyways, but if you can just write those things down, you're fine. Everybody's fine. Yes, there is the side of people that saying Bitcoin should be simpler, should be easier to use for mass adoption. I kind of sort of agree with that, but I'm more leaning towards the side of it's just 12-word recovery phrase. It's not that hard. It's not that hard. You write it down, you keep it, you're all set. Shouldn't be much to it. Anyways, that was a little rant. This brings me to the next article, which actually stemmed from the Peter Schiff's Bitcoin fiasco. The next article is called Binance CEO Suggests Crypto Exchanges Are Safer Than Keeping One's Keys. For those who don't know, Binance is a crypto exchange that started in China and is now serving customers in the US with Binance.us. So shortly after Peter Schiff tweets about losing all of his Bitcoin, the CEO of Binance makes a tweet, and I'll read it out loud, saying that many hardcore crypto organizations advocate storing your own keys. But the truth is, today most people are not able to secure a key even from themselves. A trusted centralized exchange is safer for most people. The numbers speak for themselves. You need to work on wallets. Now this statement I completely agree with because nowadays crypto exchanges are becoming more and more secure. They're focusing on offline storage and even more secure online storage of funds without getting hacked. And some exchanges are becoming more and more secure, with some only focusing on security rather than listing new tokens. But what I don't agree with is who this is coming from. And for those who don't know, in May of 2019, Binance was hacked and lost over 7,000 Bitcoin. As of right now, as of recording this, as I'm writing this script, that's worth over $60 million, and they just lost it from hackers. And now he's advocating that his exchange is safe. Like, personally, in my eyes, once a crypto exchange has been hacked once, I can never trust them again. So I find it kind of ironic that the CEO of Binance is preaching that crypto exchanges are safer for holding funds when he lost 7,000 Bitcoin of customers' money. Or probably it was his profits or something like that, but it's still a lot of money to lose. So anyways, that's all for episode 13 of Better Than Bitcoin podcast. Don't forget to like the video and subscribe. Follow me on Twitter @JaneDamascus, and peace out.